into the computation of it, right? So let's look into the disposal, right? Meaning of disposal. Are you following now?
Yes, madam.
Yes, madam.
Right. So again, this one is industrial building allowance. Is a continuation. Why is that? When an industrial building is disposed on, it means that the sale or transfer or assignment of the relevant interest in the building. So when there's a disposal, so you can say it's very clear, it's a sale, or it could be a transfer from one party to another, yeah, or it's an assignment, where the relevant interest depends on the duration of a concession, the coming to an end of the concession. So sometimes you refer to a concession. So especially for government's contract, where you are given a period of time, a concession, for example, right, for the company or contractor to handle the project, and after that concession finished, then the asset will be transferred to the government. So in this case, where the relevant interest is a leasehold, right? Again, it's a lease. So upon transfer of the lease, so it means that lease is just like a rental, right? A leasehold. So you when you sign a contract for the lease of an asset, in this case, normally it's a building or a land. So if you refer to building, lease of a building for a period of time, so upon finish of the leasehold period, right, at the end of the leasehold, then you transfer back to the lessor. So under leasehold, we have a lessor and lessee. Lessor is the one that gives the lease, who own the asset, the building. Lessee is the one that actually pay lease rental to the owner. And provided that the building is used as an industrial building, so in this case, the lessee, right, can claim provided that he incurred some capital expenditure. Demolition or destruction of a building. So sometimes you demolish a building, right? Maybe it's an old building, so you demolish, so that is also regarded as a demolition. So when you demolish a building or you destroy a building, you do not actually receive any, it's not disposal in the form that you transfer the asset, it's just that the building is demolished, right? So in that case, you don't have any disposal value on them, because no one actually pays for the disposal value. So later we look into this. And then we also have the building ceased to be used as an industrial building. So at the end of the period where the building used as industrial building, so that is also regarded as the disposal. Yeah. So when it's the disposal, then you have to compute balancing charge or balancing allowance. All right. Relevant interest is the interest in the building to which the person who incurred the expenditure was entitled to when he incurred. Right. So it means that you don't have to be, for example, when in case of leasehold, even though you are not the owner, but you lease the building and then you rented, means that you incur capex on that building, you can claim capital allowance or industrial building allowance on that building. Where a person is entitled to 2 or more interest in the building when he incurs qualifying expenditure, and one of the interests is an interest which is reversionary or on all the others, the reversionary interest shall be the relevant interest. So you have to look at if you have many interests, then which one is the most relevant. An interest shall not cease to be a relevant interest by reason of the creation of any lease or other interest for which it is a sub-lease or sub-interest of the first lease or interest. Sometimes, all right, a lessee, you pay lease rental to the lessor, and then you sub-lease, right, the building to other tenants also. So that is also, it's okay to do that, but whatever you claim is based on your capex that you incur. Okay. So ABC entered into an agreement to acquire a piece of leasehold land from XYZ for a period of 31 years at a price of 500,000 on 1st January 1995. ABC subsequently constructed a building on the land and was completed and in use on the 3rd of December 1995. The cost of the building amounted to 2 million and was used as an industrial building from the date of completion. The lease, which ends on 31st December 2025, is not renewed, and XYZ assumed ownership of the land. XYZ then lets the building out to FGH, who uses it as an industrial building. All the companies make their account to 31st of December the market price of the building as at 31st December 2025 is 3.5 million. Right, and then it says that calculate the industrial building allowance due to ABC, XYZ, and FGA. So you have to understand the scenario. You have three parties here: ABC, XYZ, and FGH. XYZ is the owner of the building, but XYZ, owner of the building, lease out the building to ABC for 31 years. So ABC is the lessee, XYZ is the lessor. And ABC, all right, construct a building on the land and use the building for industrial purpose, industrial building, yeah. So the cost of construction is 2 million. So remember that we say that if the lessee incurred capex, then the lessee can claim the capex provided that building is used as industrial building. So ABC can claim allowance or industrial building allowance on the 2 million that he incurred. When it finished, right, for 31 years, then the building was returned to XYZ, and XYZ lets the building out to FGA. So you have another party that used the building as industrial building. All the companies made their account 31st December. The market price of the building as at 31st December 2025 is 3.5 million. Remember, 31st December 2025 is the date of the disposal ABC to XYZ. Why? When the lease agreement, the lease period has finished, right? That is also a disposal from ABC to XYZ. So whenever there's a disposal, you have to compute whether it's a balancing charge or balancing allowance. So why is the allowance available for ABC, XYZ, and FGH? So in this example, right, ABC, there are two buildings here, right? Two building block. 2 million is the construction cost, right? But in here, 1995, you claim initial allowance of 10%, but you have two rates here, right? The annual allowance rate changed, right? From 1995 to 2001, the annual allowance rate for a constructed building is 2%. And from 2002 to 2025 is 3%. So the one that we have learned all this while is 3%. So previously it was 2%. So because the period is 31 years old, so you have to take into account what is the respective allowance rate, in this case the annual rate for the period. So for 1995 to 2001, you are going to use 2% annual rate. How many years? 7 years, and the cost is 2 million. So that's why you have a 280,000 annual allowance for that period. But from 2002 to 2025, the rate is now 3%. 24 is the period from 2002 to 2025, 24 years, times by 3%, times by the qualifying expenditure of 2 million, so you have 1.4. So of that, you have RE as at 31st December 2025 is 80,000, right? So remember that the asset is disposed or asset is transferred back to the lessor on 31st December, then you have to compute whether it's balancing or balancing allowance. So RE is 80,000, but the sale proceed, which is based on the market value 3.5 here, right? So that's your disposal value, right? Disposal value is 3.5, then you have a balancing charge. So if you look at this computation, right, 80,000 and 3.5 is a, what is this, right? You should get a balancing charge of 3.42 million. Isn't it? 3.5 minus 80 is 3.42 million. But you see that the balancing charge is restricted to 1920, which is actually the total allowance that you have claimed here. Right? Total allowance that you have claimed, because so once you have a balancing charge, the amount is restricted to the actual allowance claim. So that's why instead of we charge you on 3.42 million, we only charge on 1.92, because the law says that your balancing charge is restricted to the amount of the actual allowance claim. So that's why, all right, this one is good for the taxpayer, because otherwise they have to pay a lot of tax on the 3.42. But because we have the restriction, then the taxpayer only has to pay balancing charge on 1.92. Right. For XYZ, right, he's the owner, but he does not use the building as industrial building. So that's why XYZ cannot claim allowance. And for FGH, even though he used the building as an industrial building, but he did not incur any capital expenditure. So because of that, again, FGH cannot claim any industrial building allowance. For the rented premises, again, all right, where taxpayer rent and use an industrial building incur qualifying building expenditure such as renovation, the IBA can be claimed based on the amount of capex incurred by the tenant. In this case, we call it as the taxpayer or the tenant has the relevant interest. So he incurred capex, so he has the relevant interest to claim IBA. Okay, disposal value. Which value to use? The law says that the disposal value of a building is an amount equal to market value at the date of disposal. Where the building is sold, transferred, or assigned, the disposal value will be the market value at the end, at the date of sale, or the net proceed of sale or transfer or assignment, whichever is greater. So you have to look at the value, the market value, and the net proceeds. You have to compare whichever greater, then that will be the disposal value. Right, let's look at example. If the market value is 100,000, but the net proceeds is 150,000, right? So which value that you use, the disposal value will be the greater, which is the 150. So for that, you will have balancing charge of 70. Yeah, so they take the greater, so the likelihood is that you will have a greater or bigger amount of balancing charge, means that taxpayer will have to pay more tax, yeah, because the balancing charge is higher. And if in a case where you receive insurance compensation, all right, the disposal value again is the market value or the insurance compensation monies that you receive, whichever is greater. So you have to compare again between the two amounts to determine how much is your disposal value. All right. When do you have to accept? No, don't accept. When a building is being demolished and there are no insurance or compensation receipts, it may happen that the building has a negative value. Right? The cost of demolition exceeding the value of any materials recovered or sold. So when you demolish and there's no disposal value, what happens is that whatever is the RE, right, the instance net cost of demolition less any amount received for sale of material, may be added to the RE, thereby increasing the balancing allowance. So whenever you have a demolish, right, so you have whatever your RE, you plus your net cost of demolition. Yeah, net cost means that if there is any revenue, you deduct always, right? Then you have the whole amount is your balancing allowance. So in this case, remember that when you demolish the building, you do not have any disposal value. So that's why whatever it is become your balancing allowance. And your BA will be higher because your RE plus net cost of demolition. I think that I have to add in here. It has to be net cost of demolition. Right? So that become your balancing allowance. Okay, example here. In this case, the example I thought it's about demolition, but it's nothing, right? But we go through the example 19.14. Mega Steel is an established manufacturer of steel product for the construction industry. Makeup account annually to 30th of September, acquired factory building on 1st November 2018. And 8 months later, completed the construction of a new factory building. The expenses incurred as follows. So look at the date. Your year end is 30th of September, and then your expenses is 1st of 11, 2018, you purchase a building. The land cost you 250,000 and the factory cost you 800,000. So of course, you only take the value of the factory. Land is non-qualifying. On 1st July 2019, you constructed a building and incurred 20,000, 250, and 30,000 on the construction of building. But remember that your year end is 30th of September, right? So 1st November 2018, year end will be 30th September 2019. And 1st July 2019, year end is also 30th September 2019. So in both capex, right, you are going to do the first YA will be YA 2019 because year end is 30th of September. So you use the building for industrial purpose on 1st August 2019, compute for YA 2019 to 2020. All right, so this one they do it is a vertical form. The qualifying, so they divide the purchase building and the constructed building into two. All right, you have the qualifying for the purchase building is 800,000, IAAA 3% for 2019. For 2020, you claim annual allowance of 3%. The constructed building, the cost is 300,000. Then you claim IAAA in 2019, 10 and 3%, and YA 2020 you claim another 3% of the constructed cost. Right, so that's how you compute your qualifying building expenditure, whether it's a purchase building or it's a constructed building. Right, I thought that you will give example on the demolition or the disposal, but it's none. Yeah, so I don't know why this example appears in this section. All right, and then we also have building constructed for government use. Right, so it's common that what happens is that you have a contractor, right, and then you have a government. So they enter into an agreement whereby the contractor will build a building for the purpose of government use. All right, so once they incur the capital expenditure, and then once it's completed, the government will pay rental or lease rental on the building. Pay to whom? Pay to the contractor. All right, so the government will pay lease rental to the contractor. So industrial building in this case, the rate will be higher, which is 10% is the initial allowance and annual allowance is 6%. Will be given against the lease income. So in this case, lease income, all right, it says lease income, but later you look at the competition based on the capex. At the end of the lease, such building will be transferred to the government. It has been specially legislated in Para 67B of Schedule 3 that the disposal value of the building will be deemed at zero. Right, you see that here, all right, for example, whatever RE of the building, right, minus any compensation received. If in any event the owner received any compensation from the government, such compensation would reduce the residual expenditure of such building. So upon the end of the lease period, all right, the contractor will transfer the building to the government. So the building actually belongs to the government. But because of the contract, supplier will build, and then once completed, government will pay lease rental first. After some time, only transfer the whole building to the government. Yeah. So the cost will be paid by the contractor. All right. The government will pay lease rental later. So in this case, example here is that the law says that so if once you finish, when you transfer the building from the contractor to the government, disposal take place. So then you have to compute whether it's a BC or BA. So what happens is that whatever is the RE of the building, because the supplier or the contractor will have to compute because he incurred capex, so he's going to claim capital expenditure, the initial allowance and annual allowance accordingly, depending on the number of years of the lease, and then upon transferring, all right, the building to the government, then they have to compute the RE. So assuming that the RE is 1,000, and then if there is any compensation paid by the company, that will be deducted from the RE. Disposal value here is zero, right? Because the law says so. Because disposal value of the building would be deemed at zero. So disposal value is zero. So of course, in any case, the company will always have a balancing allowance. It's good for the company because balancing allowance reduce your statutory income, right? But it's not easy to get contract from the government, all right, to build a building. Okay, example here we have Tanjung Developments Berhad, a property developer company, enters into build lease transfer contract. So this is what we call just now with the Malaysian government in 2013 to construct a government office complex in Putrajaya. So this is very common, right, where government don't actually incur cost on the building in the construction of the building. So what they do is that they go into a contract with a contractor. The Ministry of Finance approved that such a construction would qualify as an industrial building. Contract was completed in 2018, leased to government in 2019 for a lease rental of 200,000 per month for a period of 20 years. Right? The qualifying expenditure was 3.5 million on 1st February 2020. The Malaysian government made a compensation of 800,000 to TCG Sungai Berhad. Compute the industrial building allowance for the company for 2019-2020, given the information that the company year end is 31st December. Okay, you look at this. When the company we're going to claim industrial building allowance, when the building is used as industrial building, right, leased to the government on 1st January 2019. So YA 2019, you're going to claim. So what is your capex? Your capex is 3.5 million. Right? So you incur 3.5 million. But what you receive from the government for 20 years, how much do you receive from the government? How the government pays the company, the contractor for the building? 200 per month times by 12 months. So 1 year, the company received 2.4 million. For 1 year. And that lease is for 20 years. So the government is actually paying 48 million to the company for constructing the building. So you think that the company is rich? Of course, very rich. Because first year only, alright, they dapat 4.8. Cost dia berapa? 3.5. Okay, right? Alright. 200 per month, 200 times 12. 2 kali kira dah. 2.4 million. The cost total building is 3.5. For 2 years, dia dapat 4.8 dah. Dah cover dah dia punya cost of capex. Okay. Alright, now well, let's see. Tanjung, the development capacity 3.5, IA 10%, and AA is 6%. You see, it's higher. So then for 2020, claim another 20%. Oh no, in 2020 they dapat compensation, so you minus from your RE 800, and for 2020 you claim another 6% of your capex to 10. Alright, so RE at the end is 1930. So when you claim, alright, the allowance is higher. And then on top of that, you receive your lease rental, which is also very high from the government. The annual rate is also high. And then upon transfer to the government, the disposal value is regarded as zero. So when you have a zero disposal value, your RE becomes your balancing allowance. So that further reduces the tax liability of Tanjung Development Sungai Berhad. You see how the company actually make a lot of money and they don't have to pay tax. So that is the end. All right. So and then it gives you a summary of initial allowance and annual allowance.
Madam.
Yes.
Sorry for interrupting.
Yeah.
Regarding the composition, actually I'm quite not sure or not understand because the compensation is for what actually?
The government can pay compensation for anything lah. Maknanya if the company claims something, then government has to pay lah compensation. Right? It could be for so many reasons lah. During the construction period, right? And then I'm not sure. I'm not in the construction period industry, but it's normal that you have to pay compensation. So in this case, government pays compensation of 800,000. So maybe because of the extra claims made by the company, all right, maybe they say that okay, the contract says ni, but I do better than that. Okay, I have added in some capex, so the government has to pay lah compensation for that. Okay, so the compensation received is actually an income to the company, isn't it? Compensation paid by government is an income to the company. So bila the income will be deducted from the residual expenditure, RE will be lower because RE is actually your balance kan of your allowance. Then minus your compensation, so that will be lower lah. But again, to me, even though it's deducted, right, it's still an income to the company. They don't have to pay the 800,000. Whatever received from the government compensation 800,000, the company actually don't pay tax on that, isn't it? All right. Okay, now we have this is the summary. You have 10 and 3% generally, but this one we have the public roads ancillary recoverable through toll is 10 and 6%. And then we have the bid list transfer just now, 10 and 6%. Then you have 10 and 3, 10 and 3. Warehouse is 10%. Then you have 10 and 3. After that, you have living accommodation, 0 and 10%. Childcare, 0 and 10, 0 and 10. So all these are 0 and 10%. Of course, you do not have to remember all these, but it's good that if you are those the common ones, all right, for example, living accommodation, the construction, all that. But normally it will be given in the exam. Yeah, it will be given in the exam. But in your midterm exam, I'm not sure because you are actually tested on this topic. So I'm not sure whether I will provide you with this information, right? You must at least remember some of it, the most common one, right, that will be tested in your midterm. So this topic, industrial building allowance, will be in your midterm part 1, right? Okay. Any question before we go into the new topic? No question? If no question, then I will just stop recording.